So, oops, let's move this over. Oops, sorry. A little loud. Awesome. We should be good to go here in a minute. Awesome. Alrighty, guys. Welcome back. Doing some quick little technicals before we get started real quick. Making sure we're all good. Make sure we have everything we need to go through today. Didn't have a set agenda today, just kind of over the week. Today's Tuesday, so over the weekend, had some really good reads, looked at some really good charts, and I just definitely want to hop on here and share it with you guys. Kind of just express some things that have happened over the weekend. Of course, our flash crash, or our retracement that we just had. So we're going to be covering all those here just in a second. For all those who weren't updated, we are going to be cutting our live streams back to once a week. Work has just picked up, and sadly enough, I just don't have the time to provide the most accurate scheduling. And I've just past 3 weeks I've just been wishy-washy, just more readings and updates versus live streams, and I just had to come to the conclusion that especially right now, maybe next year will change a little bit as well, that I could probably make more time, but right now just a little bit too clogged right now for live streams twice a week. It's just tough. So we're going to condense them. I'll choose a day, and next year, that's why I got 2022 evaluation up here, not only just for the markets, but also just for the channel and how we're going to keep moving, just for moving forward. Might just do one Wednesday, might just do one Friday, might take the whole week and just consolidate it up in like a 25-minute video and just do it, on Thursday or something. So we'll definitely see. It kind of just depends, but I'll definitely get feedback off you guys. You guys have kind of been saying that the 1 day a week is kind of nice because you don't have to worry about 2 different days, and it's a lot, and it's just you guys got your own lives going on too. So we'll definitely figure out a good healthy mix for all of us. So no worries. But other than that, guys, hope you guys are doing great. Having a great week. I know this is definitely a little bit of hurt time, a little bit. I know some people are not happy with the price action, but we're gonna go over that. So we're gonna go over that. Get some clear thoughts, and we're going to keep moving forward. But on the agenda for what I had and wanted to cover was we're going to kind of be jumping back into the regulation. I want to go back into cover, a little bit of regulatory clarity that we had. We covered this last week, but I want to go back over this and kind of talk about further about kind of what this means. I'm going to go over this crypto thesis report. That was pretty good. We won't go through all of it. It is 165 pages, as you can see, but I will be linking it in the Patreon for all you guys who want a really, really great read. I'm on page like 15. It's absolutely phenomenal. One of the main Kyle, I'm sorry, not Kyle, I'll have to remember the guy's name. Gosh, everyone's Twitter handles all over the place nowadays, but one of my favorite crypto Twitter guys that I've recommended plenty of times on the channel. Going to go over some other metrics, some other things. Going to go over some charts, and honestly, I'm just going to give my opinion, I guess, in a way. Not going to be, on here too long. I definitely want to keep this short today, so let's get into it. Alrighty, so first one, guys, I want to hop into, let's go back to our regulatory clarity for our Reddit piece. We covered this last week, so if you weren't aware, no worries. You're going to kind of be getting a fresh revamp as to what's going on. So the framework for the regulatory clarity of the Europeans and also for the U.S. for crypto assets and technology is kind of coming into fruition. We're seeing very strict regulations, of course, on stablecoins. We haven't had too much clarification on utility tokens, other assets, some of their tax laws we still haven't really gotten much clarity on. I'm hoping that will change in 2022, but God, we're just gonna have to really just wait with these guys. This is kind of just U.S. based. I know some of you guys are outside of the U.S., so your guys' governments may be a bit more up to par with how things are going right now. So props to you guys. But presently right now, the main thing I really want to focus on is the stable coins. So if we go back up here, let's go back to the F asset. Let's just gonna refer to stable coins. I think eMoney also referred to stable coins in this Reddit post as well. So, but first, let's kind of recover the F asset class. So asset reference token means a type of a crypto asset that is not electronic money. A token that can be therefore included one or several official currencies of the country EU definition. So this does kind of go back and forth between the EU and the US, as they are sharing very similar regulatory clarity. Facebook and Meta tried to do this with Libra, as you guys remember, or maybe you guys don't remember, but Facebook and a lot of other companies tried to do this with their own token, is have a native token for their platform. Miami Coin and a lot of other innovation cities outside of the US and in the US, Miami seems to be the only one that's kind of really trying to attack this. That is going to be very strictly regulated, so of course we kind of expected that is going to fall into the same category of stablecoins. and e-money as well. Electronic money transfers or e-money tokens means type of regulatory assets, purpose to maintain stable pegged value. Of course, that means stable to $1 and it does not fluctuate. Even though some stable coins do get a couple cents above their initial value, that's kind of just more on the APY side, so the average percent yearly side. So really, what at least I'd take from this, and the reason I wanted to go back to this was I was confused in terms of, at least for me, as the way we're moving forward, they haven't given us that tax clarity just yet. So, I mean, with that being said, gosh, it's really dark in here. It must be cloudy outside today. In terms of the stablecoin pegged, they haven't given us enough tax regulatory clarity yet, so there's not really much we can speak on that. But we knew that the stablecoins were going to be hit pretty hard, but in terms of everything else, we haven't seen too much talk just yet. And I mean, the reason this is good is that I guess they're starting with the core values first, and they're kind of branching out like an onion. That's much better than having them go the other route. I'd much rather have them take this route versus the other way, just for the fact of they're going to get tired, and they're not going to want to do as much research. I mean, when you're really researching this stuff and getting into pretty big depth about how you want to regulate this, you're gonna get tired and you're gonna get fatigued. And like I know as the U.S., we know our government, they're not going to they're not gonna want to spend a lot of time on this. This is like 1 or 2 pages out of like 655 plus. So it's important that they get this right, and they have not really gotten it right still, but there are still time for changes. But ultimately, with that being said, we kind of knew this was coming, and ultimate takeoff from this is that we're going to keep watching how this regulatory clarity kind of keeps moving as we move forward. So but as we continue with that, I want to make sure I didn't know if my streaming software is okay. Cool, awesome. Moving on from that, just real quick, I'm gonna link this into the in the Patreon, and also I don't think this is gonna fit into the live chat, but anyway, with that being said, another good crypto thesis for 2022, pretty updated in terms of information. There it is. Ryan Selkis, really great crypto YouTuber and innovator, came with this 165 big page report of how we're going to be moving as the future continues. A really great one. Like I said, I'm only on page 15, but if you really want a good read and really want to understand in depth further, it's definitely a really good a good read for you to take a dive into if that's something you want to advance your knowledge with. Moving over, ER, I kind of wanted to cover this. I got a lot of questions over the weekend for some reason. I'm seeing a lot of the NFT projects, people really trying to do their own, their own projects, and really trying to become involved in the space, which is lovely. I love to hear that. I've never, never want to shame anybody away from coming into the space and working here. I've been pushing that for quite a while. If this is a space you enjoy, and you have skills and artist or in artists, engineering, anything, Q&A, SME, sorry guys, I can't talk today, subject matter expert, this is going to be the space for you, and this is some clarity that, maybe, you may need it, so I always like throwing little fun charts in here, just so, you guys can get a little clarity on that. So ERCs, 721s, all difference between all of those is really helpful. Even going into our market value to realized value, I wanted to cover this just for a second. So let me go over to our PNG here. So for those who do not know, market value to realized value, we've talked about on-chain metrics in the past about unrealized value and realized value. So this kind of caters in the same way about how we've talked about that. So for on-chain analysis, we talked about holders in profit, or people over, I know we've thrown those metrics out there about, people who have bought Bitcoin since $25,000, 99.9% of people are in profit. That this caters along the same way, but the market value to realized value is kind of explained in this way, and I'll explain that right now, because I know it's confusing. So, let's kind of skip this. As a monetary asset with no earnings, it is an asset that is price versus value, which means it's always going to be judged on the relative basis to its analog cousin, gold, but therefore fundamentals worth tracking for Bitcoin too. The best bogey may be the market value to realized value, metric popularized by Coinmetric. That's the value of free float Bitcoin market cap, coins that have moved in the past 5 years to realized value, which sums up the market price of each Bitcoin according to the time it was moved on chain. So I know that was kind of confusing, and also I know my camera, still haven't got my camera fixed, which is unreal. It still does this. But with that being said, for the market to value ratio, let me get my camera fixed, and then I will kind of explain that, because I know that's kind of confusing. Even it took me a minute to even understand it, because I didn't really understand the value ratio. Let me get this all synced up real quick. Sorry guys, it's been a rough day it's been a rough morning already. Awesome. Make sure that's all good. Awesome. Perfect. So going back to our market value to realized value ratio, I know that was a little bit confusing in terms of the definition. So what they say is that usually when we start getting up towards the 2.1 to 3.1 range, that's usually when it's time to start evaluating your position and kind of feel, the sentiment of how many people are in profit and, versus the, new money coming in. And with that being said, that's just the overall chain metrics. I honestly can't tell you why that is the reason, the number 3 or number 4, but just in terms of the spikes that we've seen, I mean, even if we just go on 3-year term, we've seen, when we start to approach our local top or cycle top, most likely our local top, since, I do believe that the lengthening cycle thing is definitely a thing. And, we've talked about that plenty of times. But with that being said, us getting up into that close to 4 range, even that higher 3 range is looking where, that's where things are, kind of starting to wind down. I mean, even just here from what we just saw, let's go to our past 30 days. We did see just a high up to the 3s, and then we saw a correction, and we're going to get into that as we move forward. But it's confusing. I don't expect, of course, you guys to understand this, and I hope I'm explaining it the best I can, because I'm still trying to learn it the best I can as well. The on-chain metrics is still fairly new to me as well. But with that being said, this is kind of a good indicator for feeling out, where we are, at least in the post-market cycle. So, and even on LinkedIn, if you guys want to follow me on LinkedIn or connect with me, please do. It's great. I utilize LinkedIn a ton. It's really awesome. But overall, we're going to be hopping into some TA real quick. I just kind of quoted here. Not a TA expert by any means, which I'm not. Oh my gosh. I focus more on fundamentals and the tech side, so coding, all that development stuff. But TA is just really fun to me because, it involves math and macroeconomics. And I mean, there's some developing in TA as well. You got to understand the macro trends and all that jazz, and all the cool things that come along with technical analysis. But with that being said, I didn't do anything crazy special, just kind of threw out my opinion, and some people liked it and they gave me some kind words on it. So we're gonna hop over to the Bitcoin chart, and I put up over on my Instagram as well a story about if you felt this was bullish or bearish. But overall, what I even said in that post was not a T expert by any means, but with the recent price action, a similar instance reminded me. Doesn't this look pretty familiar? Let us take a look of how this plays out. If you survived our April to July hiccup, a 54% downtrend over 97 days, followed by 129% move up over 111 days, let's definitely see how this plays out. So with that being said, last time this happened, we saw our April to July, kind of hiccup. That of course resulted us in a 54% downtrend. I remember that because everyone was, screaming and, crying, and, it was over. I mean, it was definitely a scary time, but, if you've been here for a while, you're definitely battle hardened for a lot of this stuff, and this stuff doesn't really phase you too much. I mean, granted, 97 days is a long time, for you to beat a downtrend, for you to consistently watch your portfolio dwindle. But with that being said, if you understand the macro trends and of course the overall market sentiment, then it's a lot easier for you to think clearly. It's just when people ape in here at higher price levels and don't understand fundamentals, that's when things get stressful. I don't lose sleep over these things at all. But with that being said, enough of that. But moving forward, as you guys can see, we're on up. We've been in an upward trend since July. We have our upward channel here. Of course, our markdowns here, and of course our log scale to tell us how long and how many bars, and of course the downtrend that we've been in. So last time this happened, we did see 111% rally. So let's kind of take a look at that and see what that would kind of do for us if that were the case for us moving forward. So if we were to do the same thing that we just did, oh whoops, that was the wrong one. If we were to do the same thing we just did, let me find that. We would be doing, let's go to 97 days, and then let's do 111. Let's see. Oh, this might be a little high. Sorry, I'm like 1 day off. Let's see, 111. Jeez, oh my goodness. I mean, this is just, so that would put us at about 108k Bitcoin. If we were to follow the exact same pattern that we followed, just from our April to July section here. So some good things to think about. We'll see how this plays out. I'm going to keep this chart up. I told on Instagram and LinkedIn we'll be doing updates to see how the on-chain kind of plays to this. I know no market cycle is the same, but it's definitely worth to keep an eye out for. And also moving over to our total market cap, this is the overall market cap of everything in the crypto industry, from Polkadot to Bitcoin to Ethereum, everything. So we're sitting about $2.3 trillion. We've noticed that our 2.3 to 4 range is it's a very sticky place for us. As you can see, we spent a lot of time here. Oh, I'm sorry. That's a really ugly. Oh my gosh. What the? Why is that? Yeah, we need. Why is it so big too? TradingView's messing us up today. Yeah, whatever. Spending a lot of time here. As we've seen. So we back tested this a ton. Of course, this was a very big spot for us. Of course, once again, we saw this again. And then of course almost over here. I guess I wouldn't count this too much either. But you can overall see that this is a very, very sticky spot for us. Is that 2.3 range to like almost 4 range. And of course it makes sense. We've only seen above 3 trillion for, let's see how long this was. This was no longer than a week. 6 days, pretty much. Here, let's do it even precise as I can. There you go. 2.5 to, and then let's do, yeah, about 15 bars. So about 2 weeks on that sense as well. And I mean, I didn't even go into the back here because I mean, this is pretty much about the same. And we were just above that level as well. So with that being said, I mean, I'm going to kind of give my piece at the end here before we log off. But with that being said, and we've talked about this too, is that the slower we move and the choppier we move, if we were, of course, at 90K Bitcoin right now, I would be concerned. And of course, we would be advocating, hey, this is probably time to be watching out. We may see things start to, kind of fall down here pretty soon. But with the slow moving uptrend that we've had and the, of course, constant corrections that we have, as well as establishing a lot of these levels as official support for us to bounce off these, again, when we do have those downtrends, or of course, if we are setting up these levels to possibly never see, a 35K or 30K Bitcoin ever again, or even a 42, that could definitely be a real possibility as well. The slower we take and the more steady we climb upward is just kind of more of a better incentive for me. So I know it's frustrating for those who kind of just got here. You were here in 100K before the end of the year all the time. Yeah, I can't even say that, I'm out of that pool. I was a firm believer that was definitely possible. We did not, on this channel at least, we did not stress that a lot. We're not a big count the chickens before they hatch type deal. We were definitely wary. We talked about if we were there, cool, but we need to be cautious. But of course, now that we are not, closer to there than we were at that 69K top, things have changed, of course, a little bit in terms of how we're going to be governing this. But we've always talked about at least taking our time, turning these hard levels into support and then using these as we move forward for a better catalysis. But even with Ethereum's looking, my goodness, much better. I do believe Ethereum was holding together this market for the past couple days when Bitcoin was ripping down and everything was really in a bunch of fear. I mean, things are still nothing. I mean, I don't, the wick, of course, and the candle wick, but that was gobbled up by limit orders, and we've held this 4K line amazing, doing an amazing job. So with that being said, my final thoughts about where we're going to be heading to the end of the year. I believe our cycle is going to be lengthening to the end of the year, like we've talked about. I've been a firm believer on that for well over a couple months now, well over 4 or 5 months now, that I had a big change of thought around if I had to really say. I do remember around the summertime, we've been talking about this heavy since summer, even before summer. But with that being said, moving forward, I believe our cycle is going to be lengthening into 2022. I do not know how long in 2022, but I believe 2022 is going to be a great year for innovation and adoption as we keep moving forward. This year, we already saw some of the most unimaginable, biggest deals we've ever seen in the crypto space overall, and I believe things are just going to get better. So patience is definitely on our side, and we got the merge coming up. We have the halving coming up in 2024, so let's not forget about that. We have plenty of other projects, Polkadot, Cardano still doing amazing things, a lot of these other AAA blue chip projects that are going to be upcoming. So yeah, let's just pay attention. I mean, I know it's super boring right now. It's just like, there's really nothing else going on. But with that being said, guys, I'm going to kind of call it short today and kind of just get out of here. But I'll keep you guys updated with everything going on. It's got lots of meetings and different things going on. But thank you guys so much for your patience and, check-ins. You guys are always welcome to check in with me anytime. And we will keep it moving. So, alrighty, guys, thank you guys so much. I appreciate it. And I will see you guys in the next one. Bye-bye.